Hey everyone, and welcome. It's the Crypto Coach Blockchain Wayne. What I want to talk to you about in this video are really some of the mistakes that most people make when they're trading and how to avoid making those mistakes. So many times people don't realize all of the implications when it comes to trading. Trading can be very emotional. A lot of times when you tie money, people relate emotions to that, and you don't want to let the emotions get away from you. I love a quote by Paul Tudor Jones, because if you know me, education is one of the biggest things that I feel you can invest in. And he says the secret to being successful from a trading perspective is to have an indefatigable and an undying and unquenchable thirst for information and knowledge. Always be learning. So let's talk about some of the mistakes that traders make when they're getting into trades, just so you know what to avoid. So many people will look at trading and they don't treat it as a business. Now, whether this is an ultra part-time business, if you don't treat it as a business, you're not doing a lot of things that are going to be listed in this list. And if you're treating it like a hobby, it's going to cost you. So businesses make profits, but hobbies cost you money. So you can either treat it like a hobby and it's going to cost you like a hobby, or you treat it like a business and it's going to treat you like it's going to pay you profits like a business. You may start out in the negatives. A lot of businesses start out in the red, but as they develop and then as that business grows and people are tracking what they're doing, a lot of things can improve and you can make money. So one of the next things I see is not stepping back when a win-loss ratio is bad. In other words, when your win-loss ratio, so let's say you win $75 in trades and then you lost $50. Well, that's a 1.25 ratio. When that number falls below 1, you're in the hole, but people continue to try to dig out of a hole. Sometimes you need to step away from the charts. There may be something that you're not seeing, especially if you're trading ultra frequently. This is when it happens the most, where people don't realize that they're continuing to make the same bad decision over and over and over again, and there's something they're missing in the charts, in the technicals, in the indicators, or maybe it's something fundamental. Maybe it's market news that they weren't aware of, which I'll talk more about that as we go through this video. So that is another one, is knowing when to step out and not continuing to add to losing positions. And also knowing when to exit a losing trade. Hope will not reverse the trend. Some people will be in a losing trade, and instead of just taking the loss, taking it as an L and moving forward and learning from it, just continue to just hope that the trend is going to turn around and things are going to get better, and it just makes it worse. There's nothing wrong with having a strategy and getting out. The other thing is little preparation or training. You've got to have a strategy. You've got to have the training. And if you don't have either, then you need to start small. Now, some people will say start with a demo account, a fake account, paper trading they call it, where you can just play around with some trades. That's really only good to get the technicals of how to execute a trade, buys and sells. That really doesn't show how successful you could be, because it's easy to make $1 million on a paper trading account or demo account. There's nothing to lose. Who cares? So you're going to risk it big, not worry about the risk. If it pays off, you look like a hero. The minute you start playing with real money, it's different. So you can start by working with small amounts. And biggest thing about crypto, you can trade some cryptos. You can trade for very small amounts. So even the equivalence of less than $1, less than 50 cents, or even less than that worth of crypto into trades, just to see how you would handle that, right? And so training, preparation, exercise. When you think about an elite athlete, a professional athlete, they don't just get out on the field and start playing. There's a lot of practice, right? They do things to work on their body, just like you should work on your mindset with your training. But then they actually go through the motions of actually running through plays and doing those exercises to where it's muscle memory. Same with trading. You've got to prepare yourself. The next thing is being too emotional about money or trading off emotion. So if you personalize losses, you can't trade. If you lose a lot and you just get really pissed off, chances are you need to step away from that for a little while, because you need to have a strategy. Stick with that strategies don't have emotions. When you don't have a strategy, your emotions will control your actions, and that's when a lot of people get into trouble. So lack of record keeping and not doing a post-trade analysis. Also, you should keep a trading journal. If you're going to treat this like a business, you have to keep records, right? If you want to grow your numbers, you have to know your numbers. So other than that, you don't know how you may think you're doing good. You think, well, I won this many trades, I only lost this many trades. Well, depending on your risk in each trade, you could still be in a negative and not really be doing as good as you think you are. So keeping a trading journal and writing down record keeping, doing a post-trade analysis, how'd you feel, what'd you do right and wrong, and then being able to reference that and learn from your mistakes is really important. So again, I recommend everybody get a trading journal and make sure you keep track of what you're doing. Next thing is blindly following mechanical systems, signals, price forecasting. Just blindly following. Like this signal said this is going to go up, to buy it, and they'll buy it. But some people won't even pay attention. Signals, for me, it gets to be where it's a lazy man's game, because you're relying on someone else to do all the research and all the technicals for you. And a lot of times they may not be right all the time, and they'll even say, even in those signals, they'll say where to set a stop loss. And I'll talk more about stop losses in a second. But if you don't follow the full signal, then you're definitely gonna be wrong. But my challenge to you is don't rely on signals, other than if you have access to signals, use it as a confirmation to see, is what you see on the charts, is what you see happening between fundamental information, between technicals, and based on that signal, does that all line up or does it conflict? And if it conflicts, then just follow it out and see what happens. So don't blindly follow these systems, mechanical systems, signals, or price forecasting. It can get you in a lot of trouble, because sometimes technicals don't always play out, because there may be some fundamental info, there may be some sentiment that's playing a key role in something, right? News that could cause an asset to either go up or down based on what the news is, and sometimes it moves the opposite of what you think. I don't know how many times in my stock market days where you'd hear news about a company and you would think, oh, this is good news, this is going to make the stock go up, and it actually goes down. So it's not always a one indicator. It's not a once and done, this is a sure thing. So next thing is, don't be trading based strictly off of news releases, exchange listings, partnerships. However, you can't ignore those things, because they could impact the price. Just understand that alone is not going to impact price. And if something inadvertently causes a price to jump up drastically in a short period of time, just know the market is going to take a lot of that back. So know when to exit a trade. Some people will think that it's going to keep going up, right? Into 2017, everybody thought we were just going to keep going. And what happened? The market corrected itself. We had a downtrend, a drastic downtrend, but the market will take it back. So keep track of relevant news releases, but also don't trade strictly off of that. Another thing that could cause some people some headache is not learning how to short, not learning how to long with leverage or short with leverage. A lot of people will say, well, it's kind of dangerous to trade with leverage, and it can be if you are doing high risk trades. But a lot of times utilizing leverage, once you get comfortable with the strategy, can allow you to multiply a position. So instead of that being a 1% gain, it could be a 5% gain. Or instead of that being a 0.5% gain, it could be a 2.5% gain. So that's why it's important to understand that. And the market never moves up, straight up, right? Even in uptrends, there's a lot of volatility. But even in downtrends, there's also a lot of volatility, up and downs within there. So understanding how to short the market will allow you to benefit when those times when you see, hey, when it looks like the market's going to go down and you feel confident in it based on everything you've looked at and all your research, instead of just stepping out of a position and saying, okay, I took profits, gain some profit on the way down too. You can make money both ways. It doesn't matter. Traders learn how to make money whether the market's going up or down. It doesn't matter if I'm bullish or bearish, because you know what? There's ways to make money in both markets. Another thing is risking more than you can afford to lose. Some people will do this, and sometimes it's out of desperation. I've lost this much already, I need to try to make it back. And they aren't able to do that, and they continue to trade with emotion. So don't risk more than you can afford to lose. That will cause you to break from your strategy, break from what you know you should do, when things look a little dicey. So don't risk more than you can afford to lose. Another thing is placing improper stops or trading without a stop loss. So many people will not trade with a stop loss. You think, this asset can go up or down. And depending on what you're betting on, you want to have a contingency plan that if it goes the opposite way, what am I comfortable losing? And that's what you need to set as a stop loss. There's nothing wrong, hey, once you're in profit, to raise that stop loss up. That way, you're, instead of stopping a loss, you're preserving a profit. But biggest problem is people don't set proper stop losses. So if you set it too close to where it's at now, though, like say you are in profit, a little bit of volatility could cause you to miss out on a bigger run. So depending on what you're seeing in the market, if it looks like that run is starting to sputter out and lose its steam, then maybe you can set a tight stop loss. But if you think, hey, it could come back down, find a new floor, and continue to move upwards, then you may want to not set a stop loss as close, but also have a plan going into a trade. What are you going to initially set that stop loss at? That way, if this trade goes the wrong way, what are you comfortable losing? All right, so that's another thing. And then also not calculating a pair's risk-reward ratio. If that pair, is it worth the risk or reward to enter that trade versus putting that into another trade? And in crypto, you have pairs where I can trade Bitcoin to US dollar, but I can also trade Bitcoin to Ethereum, Bitcoin to Litecoin, Bitcoin to Tezos, or whatever other crypto you want. There's a lot of different pairings. So what are the trade-offs to where the whole market may move up, and while you thought you did good because you're looking at the dollar amount that your value went up from that trade, when all that happened is the whole market moved up, but you'd have made a lot more if you'd have been in this other trade. And that's not a bad thing. I mean, never be embarrassed or worried about taking profit. Even if, say, something goes up, you make a decent profit, something that your strategy said, this is what I want to do, and you sell, and that asset continues to go up. Don't sweat it. Never beat yourself up for taking profits. All you can do is learn from it at that point anyway. There's nothing you can do to change it. So even if you did something wrong or you should have done something better, there's no point in beating yourself up. The other quote I love when it comes to trading is that markets can remain irrational longer than you can remain solvent. So a lot of times the majority thinks, oh, the market can't go any lower. Guess what? It's going to go lower. A lot of people think, oh, this market's not going to go any higher. Guess what? It's going to go higher. It can go higher. It can still pump. So the whole point is you have to be patient and never chase a trade as well, because there's no rush into this game. You can start with a little or as much, and if you missed a good trade, don't worry, there's going to be 10 more later. So don't worry about it. Just continue to improve on yourself. And when you make bad choices, make bad trades, sometimes there's nothing else you really could have done. It was a bad situation. And sometimes you can look and say, okay, what can I learn from this? And that's what's important when it comes to trading. So make sure, this wasn't put together to scare you off from trading, but some of those points are things you need to keep in mind and make sure that you don't let them happen to you. Now, for me to sit here and tell you not to trade with emotion, you're going to do it when you first start if you haven't started already. But just learn how to control that, learn how to get out of that. And sometimes for me, it was learning how to do the opposite, right? When I had that pit in my stomach, like, oh my God, I don't think the market could go any lower. Hey, that's a good buying opportunity for me. When I'm feeling good, like, hey, this market's doing great. This is a bullish market. My gains are high. When you're feeling really good about it, that's the time to sell and take some profits. But our instincts tell us otherwise. Our emotion tells us otherwise. Our fear of missing out tells us otherwise. So that's it for this video. I want to thank you for watching, and I'll catch you in another lesson.